Jonathan, you were looking this morning in the Journal at sort of how people have been looking, trying to go back to 2003 and see what happened in the wake of Microsoft saying it would pay a dividend.
Right. You know, a lot of people were expecting Apple to eventually do something with its cash. It did on Monday, of course. The question now is, does this mean that they're less of a growthy company? That's the, you know, for years, people don't buy Apple because they want some steady sort of return. They want to see profits grow. They want to see the company take its earnings and plow it back into research and development, into acquisitions, into expansion, and all the rest. But I think the argument here is that we don't really know what's going to happen, because when Microsoft instituted a dividend, its stock essentially went nowhere for 10 years. It's up 20-some% this year. But
and it was also, I think, you know, reading your story, that one you pointed out also sort of the difference in the time periods, but also just the difference in the companies is striking. Back in 2003, Microsoft had just come off that big, you know, antitrust case with the Justice Department. It was in the wake of the tech bubble bursting. It was also, I mean, they didn't have any new products. Apple is still innovating.
That's right. Well, I mean, they were plowing a lot of money into Xbox, and you can, you know, basically decide whether Xbox is an iPad or something like that if you want to put those apples to apples there. No
I don't think there have been 3 million Xboxes sold in 3 days of the new release.
Now, Microsoft also had a giant special dividend that they paid a year later. Is that something that perhaps a lot of people who are going into Apple now expressly because of the dividend, they're hoping, oh, they're still going to have multiple billions of dollars of cash left. Maybe Apple throws a bone and do a $30 per share dividend a year or two from now.
You're thinking big there, huh?
Well, keep in mind that the special dividend, that was July 2004. That was the largest one-time corporate payout to shareholders ever. And I don't know that Apple has given any signals that it wants to do anything like that. In fact, what they want to do is they want to make clear the $97 billion or whatever they have, they don't want to touch that in paying out their dividend and their buyback. It's all going to come out of future cash flows, and about just a fifth or a quarter of that number. So,
Jonathan, while you're talking, just on screen for our viewers, we have some of the numbers involving Apple and looking at Microsoft. But one thing actually to go back to, I think is important to keep in mind when you think about Apple's cash pile. They have $97 billion, but they can't lay hands necessarily on $97 billion immediately. Why is that? Because
a lot of the money is earned overseas. In fact, most of the revenues are generated by people buying stuff overseas, and because of U.S. tax law, they can't bring it back here to headquarters without paying a pretty stiff fine, or not fine.
Sorry, fine. It's taxes. They have to pay taxes. Yeah, Come on, what are you buying into? Oh my God, taxes! It's like a fine. I don't know. I pay taxes. They can pay taxes.
Now, I assume Apple shareholders probably don't want to mimic Microsoft's long-term stock here since 2003. If you look at over the past 10 years, the majority of Microsoft's kind of appreciation has come from that dividend. It's up about 60% with the dividend, only 20% on a price appreciation basis. And Apple since January 2003 is up about 8,000% over that time. So I'm assuming that people who are buying Apple now are like, oh, they're looking at Microsoft's chart, like, please do not mimic Microsoft for a variety of reasons.
Well, look, the key that we want to point out in this story is that nobody is saying that Apple is necessarily going to follow Microsoft's path. In fact, I mean, stock price-wise, and there's every indication that it won't. But I think the key here is that when a tech company initiates a dividend, what it tends to signal and what it tends to sort of herald, even if it's not an intention by the management, is that growth is going to have to, not plateau, but it's going to have to taper off a little bit.
Well, let's take a look there on the stock performance for Microsoft in the 12 months after the announcement of the dividend. And it was down, what was it, 2.3%?
2.1%, but the Dow was actually up 21% over that period.
Wow, so that's big difference there.
Big disparity. So, I mean, they're basically down 22% off the, I know the Dow is not the benchmark per se, but close enough.
Right. And then you also have the fact with Apple, you're talking about just sort of the big numbers involved. Even the most bullish investors acknowledge it can't just keep growing at this breakneck pace, although who knows if they roll out, maybe if they come out, if Apple TV lives up to what some hope.
Right, and the other thing to keep in mind is from a stock price perspective, people have been saying that Apple is getting too big to really grow since it was about $350, and now we're up over, we're not over 600, but we're flirting again with 600. So, I mean, you could say that it's too big, but you also would have missed a whole lot of upside here. So.
Right.